Hello everyone, welcome to LearnStocks101.com. So our free market video is Monday, August 11, 2014. As usual, we're going to go over the market and some stocks. I got requested Apple, GMCR, Pandora, and Yelp. But at the end of the video, we're going to show you a weekly options trade that we did today in about a half an hour that made us some decent money. And we'll explain why we're going to talk about that when we get to the end of the video. So the markets here, I'm using one of my normal titles, mixed signals, because the signals are mixed across the board. Even though we had some follow through from yesterday or some Friday's move, we got a gap up and a run up today. We still had some violence in the market with the SPY coming off its highs. You see it banged right into that 21 EMA and came right off its highs. Even made some lower lows in later in the day. So this is a key level for the SPY. It needs to get through that 21 EMA to break this downtrend. I'll talk about this ambush zone a little bit more thoroughly later. But you can see if I draw a fib there, you can see that the bottom of that zone that it has to push through between 194.80 and 195.81 is right in the middle of that zone that would be what you would call a higher or lower high. We'll talk about that more when we get to the IWM. The mixed signals are because the Qs are closing above their 21 EMA, so that's pretty bullish. But then you got bonds not budging, not even breaking their 80 EMA. And if this is a stock that you're going to buy this because it's holding its 80 EMA and trading pretty solidly. Might wait for a pullback, but if money is going to flow into bonds or not flow out of bonds, it's going to be trouble for stocks to go a whole lot higher. The IWM did push through its 21 EMA, but not through the zone that I have here that would make it a lower high. And let me explain these Fibonacci's that I do real quick. When you get swings and you have an uptrend, these pullbacks usually hold a typical level, and that's between the 50 and 61.8 retracement of the previous swing. Same with this swing, same with that swing, and you see how that swing, we drew it in there and it broke it. So the same works in a downtrend. You have a retracement to here, which was a zone that it needed to get through and didn't get through, so it went back lower. And now we have a retracement here to a zone that it needs to get through. The top of that zone is 113.44. And it did get through that zone, and it is over the 21 EMA, but it needs a close over that if it's going to change trend and get back to 115.65 as its first step. So that's where the mixed signals come in. Because we have the SPY banging up against resistance, Q's above it, IWM above it, but not through the ambush zone, and TLT not breaking trend. So what that means is you got to be a really good judge of stock charts to know what is low risk, what is a good trade, and when to get out and where to set your stops and where to set your targets and all that. You got to pick the right setups. That's what it boils down to. Not every stock will work here, especially with the market going seesaw on you most of the time. So the requests that I got tonight are actually good for this explanation, because Apple, I talked about last night. I said if it gaps up and runs a little bit, for a swing trade with a target of 98.84, again, maybe not in a straight line, put your stop at 93.28. And that works out pretty well here in this case. Now, if it gaps up again tomorrow and is making another higher low, you put your stop in at today's low, which is 94.84. That's how I like to swing trade. Put a little cushion on, 2-bar trailing stop, because we know nothing goes in a straight line, and look for the target at 98.84. And that's the only way you can trade this setup right now. Trail your stop in the place that makes sense to you. You might not like the 2-bar trail, but your target overall is 98.84, and you don't want to break it down too much. So that's the Apple setup. Again, trailing your stop, target 98.84. GMCR I actually like to the downside because of the earnings report, how the indicators are set up on a bearish position, the minus DMI control, RSI below 50. And again, low risk. Now, this isn't the best setup of the bunch because I don't have a squeeze going on or anything like that. I'm momentum to the downside. But I'm looking at 118.29 as a stop for a short trade because the risk reward is great. I'm looking for a $3 risk down to 111.22. $3 or $4 gain is not only my first target. I'm actually looking for it to break that and move down to 103.5. So I actually like this short. Well, does it mean it works out? No. Doesn't mean Apple goes higher either for a long trade. But I like the setup on this way. The indicators are pushing, and everything that's set up, this looks like it's going lower. Now, Pandora, we got requested, is a little tricky here. because we have a swing that had an ambush zone up here that got violated on the earnings report. So we got to take the earnings report out of the equation. So the question on Pandora is can I trade this here? And the answer is yes, but I like a trailing stop, 1 or 2 bars. So I actually like it at the low of 24.87 as a stop with a target up here at the gap fill that I have tagged. You really can't see all this. The gap fill after the earnings is 27.57. And what I like about that puts me right in the middle of my zone that I just explained earlier, which has a high of 28.19. So again, the trade here is a trailing stop, first target 27.57. If it pushes through 28.19, could have the mojo to get to 30.48. Yelp is the last one, and if you look at the Yelp chart here, you can definitely see the support and resistance levels, but you can't see what's really going on in this chart right here. So it's basing. We have solid support of 63.5, solid resistance at 71.88, a little more resistance here at 76.5, and then $80. But it's not really doing anything. So that's when we pull over to our squeeze charts, which is a proprietary indicator to toss. All this means you can set up on your charts Bollinger Bands inside Keltner channels, which means it's building up energy. And usually when that energy explodes, we have a decent move. In this case, it was to the downside. You see my chart gives me red dots when the Bollinger Bands are inside Keltner channels. Then when it explodes, it gets a green dot, runs down for a while. You see, you make some decent money on the downside there. So now we're in a situation where we have a Bollinger Bands inside Keltner channels, the red dots. But I don't see a trade here yet. To answer the person's question, I don't see a trade here yet because I want to see price move to one side of the bands or the other. Right now it's in the middle, and I want to see these Bollinger Bands start to expand one way or the other. So it's all based on price and where these bands are going. So again, but if you have a bullish bias, you're going to trade it off a trailing stop. And if it gets above 71.88, you're looking for a move to 76.50. If you have a bearish bias, your stop is at 71.88, and you're looking for a move back down to 63.5. I actually have a bullish bias on this, the way things are set up here on these indicators. Plus the MI in control, RSI above 50, but I want to wait for that squeeze to work its way out. So I told you I'd talk about that Tesla trade. All right, so I moved on over to the Tesla option chain that we traded today, and I told you at the beginning of the video I'd tell you why I was going to show you this. And it's a twofold reason, because I get a lot of questions about, do we day trade, and if we do, can we show some examples and how and why we do things? And it was a great question. They're great questions because the second part of the reason is because I can now show you that we apply our same principles that we do to our daily candle setups to our day trade setups, which is low risk, high reward, decent probability trade setups. So that's the reason for showing you this. It's not about the money that we made on the trade. That's obviously great, and it's good to have, but you have to have a process. You have to have a process to be getting in, and you have to have a process to be getting out. So again, reasons, because questions, and we can show you our process here of the same principles that we apply to our swing trading that we do with our day trading. So let's sort of take it from the beginning and try to go through it quickly without, because I could spend about 30 minutes on this. And I won't talk about so much the exit, because the exit is sort of your kind of rules that you apply. I'll tell you my rules when we get to it. But it's more about the entry and why you're entering it. So the Tesla trade, we put Tesla on the radar this morning on the upgrade and the gap up that it was having, and the trade was based on the charts and also options pricing. So it's sort of a hybrid, something that it takes a little bit to understand, and also something that's not for everybody. Not only is day trading not for everybody because you have to have good rules and good discipline, but doing it this way, you have to have a great understanding of what's going on with options pricing as well as with the charts. So Tesla was moving on an upgrade, so we had a candidate. I like to go at least 1 or 2 strikes out of the money of where the stock opens. So that's gave me the 260 strike here. And once I choose my strike, I look at the volume, and I know the volume's pretty high, but at the beginning of the day was some volume coming in. But the main thing is I look at the low in the open. Now, within the first minute or so, if that's the same, I know I have a good trade set up, because it's like a 5-minute chart candle that I've talked about, the 5-minute bar trade. That could put you in a pretty good base at 270 on this strike right here. So again, Tesla moving on an upgrade, had a gap up, had some momentum behind it. We had a chart that said it could go a little bit above 260, and it wasn't quite there yet. We picked the 260 strike because it was a little bit out of the money, like I like to do it. We got the high and the low, the open and the low at the same price. So then we try to enter the trade within a certain percentage of this. So I actually ended up with 8 contracts, 4 360 and 4 420. And again, like I said, I have specific exit rules that sort of lock in profit early, and then let a few contracts run, and then if I can get a few off where at the 50% level like I sort of let 1 or 2 run at the end of the day. So that's exactly what happened here. Is that I got out of the higher price set of contracts with about a 10 or 20% gain. I let the second half run to a 50% gain, took 3 off there, and tried to let one run, and then when I got to a round number, I took the trade off. So I'm like, okay, I don't need I don't need to make a home run on this. I got what I wanted out of this trade. So again, just to recap, again, specific entry and exit rules. Specific entry rules are the most important thing in these situations. Your exit rules can be based on what you're doing, but you need to make your exit rules as locking in some profit early and letting the rest run. So I hope this makes sense, because like I said, the only reason I'm showing you this is that to answer the questions that I get every week, and to show you that you can apply the same rules of low risk, high reward entries to weekly options day trading as you can to your swing trading. Again, and just to repeat, this is not for everybody, and this is not something that happens every day on the site. So again, this is a great example, a great thing that happened today, so I could show the example and answer all the questions that we usually get.